Hello and welcome to our latest Fund Manager Insider video. Today I have with me Noelle Cazalis from the Rathbone Ethical Bond Fund. Noelle, thank you for your time today.
Hi, thanks for having me.
Right, Noelle, to start off with, many investors either don't understand bonds or, to be blunt, just aren't interested in them. For those people, could you explain very simply what bonds are and why they are important?
Sure. So a bond is a debt security issued from a borrower, that could be a government or a company, and sold to investor. Usually we get a stated rate of interest rate that we get called a coupon and a final maturity. It could be 2 years to maturity, it could be 30 years. And effectively, as bondholder, we have no ownership rights. We're not equity holder. We don't vote on company, but we rank above them. So if there is a problem in the company, we get our money first. And so effectively, it is less risky than investing in equity. And in terms of why they're important, I guess there are a couple of things. The first one is it is a known income stream. We know how much money we're going to get every year. And we know the final value of the investment as well. So it tends to be quite attractive for more conservative investor or investor that would need income, be it for retirement or to pay school fees and things like that.
So moving on to the Rathbone Ethical Bond Fund, could you explain why the fund mainly invests in investment grade bonds and what the term investment grade bond means for those that are not familiar with the term?
Sure. The Rathbone Ethical Bond Fund is a corporate bond fund, which means we invest in corporate debt, not government debt. So that's the main, I guess, differentiation versus a government debt fund. And we focus on the highest quality corporates, which are called the investment grade companies. And investment grade could really be opposed to high yield or junks, which would tend to be more leveraged companies. So therefore your risk is higher. Rather than, I would say, in our fund, there is really a high focus on quality. So by quality, we mean, strong cash flows, company that can service their debts, and therefore we're not at risk of them not being able to pay our annual interest.
And in terms of the composition of the fund, could you run through what sectors the fund is currently favouring and whether the sort of sector weightings have changed a lot or have not changed this year given the acceleration of the COVID-19 pandemic?
Yeah, so the Ethical Bond Fund has quite a lot of sectors that are excluded because of this ethical overlay that we have in the fund. So for example, we have no exposure to oil and gas, car manufacturers, armaments, etc. But within our investment universe, there are a couple of themes that we favor and sectors as a result. The first one are banks and insurance. Looking back since 2008, this is a sector that has really changed. If you look at, 2008, it was very much, the crisis was driven by problems within the banking sector. Right now, it feels that banks have been more part of the solution. And a reason for that is because regulators have really forced the banks and the insurers to hold more capital. And by doing that effectively, it protects bondholders better. So these investments have become, over the years, less and less risky. But also there's a lot of change in this sector, regulatory change, which means that we find a lot of opportunities for outperformance and really good alpha generation there. So we like financials. So you'd see in our fund that we have, more financials, that we have corporates. And really the biggest weight would be to insurers. We feel on the ethical mandate as well, they really screen well. In terms of other trends, I think COVID-19 has really accelerated some of the themes that we were already looking at, such as the rise of online shopping. That's just, accelerated significantly. So we look at avoiding kind of traditional retailers and moving more into, for example, distribution center, where the demand for this kind of assets has been significant. We also look at more renewables with their energy transition that we're seeing. So we're looking at renewable sectors such as solar and wind. And another theme that has been really interesting this year actually has been the rise of social bonds. For many years, we talked about green bonds, but now we've seen social bonds really taking off. I think the market is up 75% in terms of volume this year. And this is really, bonds that would be issued to fight the health and economic consequences of this crisis, of the pandemic. So we've been investing in quite a few of them, one of them being issued by the African development banks, where effectively they finance social projects there to, help African economies and populations to fight with the consequences of COVID. And the market has been really quick actually to put forward this type of instruments, showing that capital market can really help in these difficult times.
So the fund has outperformed the average return of funds in the peer group over the long term and has a current yield of around 3.6%. But so you give us a flavour there of the sort of sectors that you're favouring in the fund. But in terms of when you are looking for the best bonds to invest, what are the main attributes that you look for?
Sure. So we look at sector, but then within sector, you have so many different companies. So we really need to do, credit work right and make sure we pick the right ones, the ones that are going to be successful in the long run. So I would say, first of all, we're active investor. We're not passive or quasi-passive, which means we only buy something if we have conviction in it. We're not forced to buy something because it is in an index or a benchmark. So that means that our fund really has a lot of conviction behind it. For example, as I say, we don't like traditional retailers right now. We have zero exposure. So that's really, good as an investor to be able to express our conviction like that. And in terms of what we're looking for, there are a few attributes that are very essential for us. The first one would be character of management, looking at management, their track records, how they plan, to develop the business over the next couple of years. Because if they raise too much debt, that's a concern to us. For example, then the capacity to repay. What kind of cash flow do they generate? Are these cash flow resilient, or can they change dramatically if we change economic cycle, for example, or if or are they really volatile? So we really do a lot of stress testing around cash flows and how safe our coupon is effectively. Then we look at collateral. So is the bond secured? Some bonds are secured against specific assets, could be property, it could be a wind turbine. So we really analyze that because that protects us as bondholders. And then we look at covenants. Again, this is the kind of terms and condition of a bond. We read the prospectus, which could be a bit boring for some, but I quite enjoy it. You read a 200 pages legal document to understand really where your risks lie as a bondholder, and where you are protected in this investment. But I would say, we usually say that with truffle hunters, we kind of start with our theme and then go into a few companies' idea. We don't analyze every single company. Obviously, some are excluded, but also some, from a theme perspective, wouldn't really fit our long-term thinking.
And you gave some details earlier on about some of the sin stocks that are excluded from the portfolio due to the ethical screen that is applied. Could you also run through how you screen for one positive quality in terms of a bond's ethical credentials?
Yeah, sure. So perhaps if I just go back onto our ethical screening process, we have two layers. The first one is negative screening, and then, as you say, more positive screening. So the negative screening really look at a lot of sectors. So it would be excluded companies with exposure to tobacco, armament, animal testing, gambling, high impact activities such as oil and gas and other extraction activities. And this list is not exhaustive. I mean, there's over 30 different criteria, but we publish it on our website, and I think it's really important for investors. Every investor might have different criteria or things that they would find ethical or less so. So all we can do is to be as transparent as possible. So it is on our website for more granularity there. So once a company has passed that negative test, so they have no exposure to this industries or activities, we look at more positive. So it would be looking at things like employment practices of a company, provision of social services, for example, charity donation, but also mitigation of their impact as a company. And every company that we have in the fund has no negative and at least one positive. And just to give a level of comfort, perhaps around the governance, this decision is not made by myself as a fund manager. It's made by a separate team that is responsible for the screening. So the decision is completely separated, which means if I really like something from an investment perspective, but it's not okay or not that great from the ethical side, I cannot have it into the fund. We have to, they have the veto on every investment effectively.